Morning traders, Paul here with GammaEdge. Today is Monday, the 24th of October. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. The summary for today, the short-term signal has transitioned to a new long with our action on Friday. The intermediate and long-term signals remain off, but they are in a position that if we continue to advance, we could actually see them transition to the long side, a long signal also, which would increase our exposure. We think, of course, that when we have just the short-term signal, we are prone to failures. We want to caution everybody, but conditions are marginally improving to the long side, so be aware of that. Dominant positive gamma for the SPX remains at 4,100, but 3,900, as you'll see in the last slide, is pretty close. We could bounce between the two. Negative GEX has dropped from 37 to 3,600, which we think that is material also. So want to pay attention to that. That is supportive of the bulls when we see that, and of course of people taking short-term hedging positions to the downside, taking advantage of the potential for convexity later on. We are at the top of the SPX transition zone, which is the top of where pressure starts to build to the upside. This does favor the bulls. We are looking at several levels here, 38, 38.50, 39, and of course the JPM at 39.05. Which is the end of the month expiry, are all near-term targets, and so we think those are realistic. And taking a look at the Delta-Moneyness in the SPY and the Qs, the SPYs actually have quite a bit coming off on the call side, in the money call side today, which could put some downside pressure on things. The Qs actually don't start coming off until Wednesday and Friday, so we'll pay attention to that. The SPX is supporting the today's action though, so we are actually expecting a little bit of a pullback after the initial gap up is absorbed. Taking a look at the cumulative tick, which is our primary model, you can see that we actually did have 4 successive days of failures, and I've numbered those here. Friday's action did show us starting to turn up. It's the first day of the count, short term only. The intermediate term is still in cash or bearish, but improving, as I said, and then the long-term ribbon is still headed down. We need to see a continuation of the CT to continue upward, to continue to build out on the bullish side, the long side, and are looking to do that. Taking a look at for key levels, the 4,100 remains as positive GEX. 36 is the new level from 37. It's worthwhile to note that the 4,000 level has reclaimed the POI level, so now we're back to where we were in May and June, where the 4,000 strike is the dominant strike on both sides of the table. We'll note that the expected move today is about 3%. That is open, high, low, close, and so just be aware that we could get some range today. The weekly, the transition, as usual, is boxed in here. You can see that we're at the top of transition in the SPX PM, which is the weekly. We don't think we're going much below the 3,700, but pay attention to that as the negative side or the put-dominated gamma starts taking over in that particular area. Not a lot of levels down there, though, so we're not actually anticipating a rapid drop should it occur. To the upside, the 37.45 is just below where we closed on Friday, and you can see fairly constructive. There are a couple pockets here that need to be worked out. Some calls going in, puts being closed above us. As we move up, we anticipate that these puts will get closed as they'll lose some of their in the money levels, and as a result of that, we might see a little bit of push-pull action. But overall, we've got more calls coming off in the structure, or more calls in the structure than we have puts. And generally that's starting to get more and more favorable to the bull side of the equation. Taking a look at the 0 DTE, again, the transition, the negative gamma level, the positive gamma levels, and when we say that we're put dominated, call dominated, The 3870 really seems to be the bridge too far. It corresponds to the expected move. You can see a lot of delta notional positive all the way on up. Above 3800 we start losing influence of the 0 DTE. Just pay attention to that. And below this 3670 we get into a slippery slope to the downside. The 1 DTE still loose, relatively fat. This 3770 range is kind of interesting. We've got a big pocket right here that we parked into the weekend, and so how this develops today will be very, very interesting. 3850 to the upside, you can see all the way up here at 4,000. Actually tomorrow we have some coming off, but not very strong, very balanced here on the 1 DTE. In terms of the combo complex, when we take a look at everything thrown together, again the transition here, a lot of green on the delta notional, some pockets where we could potentially park, and then to the downside below that 3675 you can see things start slipping down into that put dominated gamma world. Call domination really starts where we are. You can see right here at 3755 zone all the way on up. We're in that call dominated gamma zone, and you can see that all the way up to about 3870, 3875 tends to be again that bridge too far. Don't anticipate moving today aggressively up into that area, and could actually see some of these pockets really start to develop depending on what happens. Do we get some monetization in that area or not? Taking a look at the moneyness, we're actually we're moving positive again relative to where we were on Friday's action, so I want to pay attention to that. Pause your players here, read through the definitions if you're not familiar with this. This is a new construct that we brought in October, and it helps us visualize what's happening in context of the overall strikes and where we think we could get some reversal points throughout the day. Taking a look at the SPY, this is what I was talking about earlier. We're actually seeing some in-the-money calls getting, with the potential getting monetized today. The SPY is a equity settled instrument, and as such, when we see this, we tend to pay attention. You can see the out-of-the-money calls. It's relatively flat. There's no projection down into here, whereas we do have a fairly significant amount of projection that's going down on the call side. Looking here on the put side, relatively flat on the 0 DTE here, relatively benign as you can see for the next 2 days, and then we start developing out at the end of the week where we start seeing some out of the money puts and in the money puts starting to get taken off the table. Watch the relative magnitudes. You can see that actually we've got a little bit more going on the put side than we do the call side. The SPX PM, same animal over here, flat, flat, flat. Here on the in-the-money calls, we are starting to see a little bit of a development out here at the end of the week, which is the Friday, and you can see that here with the 4 DTE relative to where we are today. This is today that I've circled here, and you can see that we do, just like in the SPY, we are seeing some monetization potential on the SPY, and maybe here also in the SPX PM. Taking a look at the Qs, Qs are relatively flat. I mean, obviously we do have some bit of a behavior here, but looking here on the put side, the Friday is where we really start to see some action here. Again, look at the magnitudes here. We do have a little bit of in-the-money puts coming off on Wednesday. That could be constructive to an upside move. And you can see over here on the call side, though, on Wednesday, we actually have some in-the-money calls that are coming off, and that could actually be the counterbalance to what we see here on the put side. So not seeing a lot of pressure early in this week. If anything, maybe a slight bias downward after we absorb this morning gap up in the ES. But on Friday, you can see that things are starting to develop, and we'll have to pay attention to see how things pan out. Taking a look at the overall SPX structure, we're sitting right here. We're at the top of that transition, as I indicated. We do still have some pockets that we could potentially hide. Here's that 3900 line and the 4100 line, which is currently plus GEX. Look at the relative magnitudes here, though, right? So even though we're closer to this, if we continue to get build out here, we could actually see this transition down early this week. This would be a near-term target. The 3905 is sitting right there, of course, and you can see what that means here. And then down here at the minus GEX level is at 36, dropped from 37. 37 is all but monetized. and 35 is in close proximity in terms of the magnitudes here. So as we continue to move up, we would expect this to drop a little bit. If we do get any increases in these levels, it's because we're seeing puts go in down at those levels. So that's it for today. If you have any questions or comments, would urge you to come into the Discord and ask them. You can get there by going to GammaEdge.us, clicking on the pricing tab, filling out the blanks, and come on in for a 14-day free trial. All the tools turned on. A lot of good traders, a lot of good dialogue going on of how to apply Gamma and Delta to your overall trading. Follow us on Twitter at GammaEdges with an S, and then here on YouTube. Give me some immediate feedback if you like today's content by smashing that like button. And of course, if you want to be notified of when Taylor, myself, or Michael post something, go ahead and subscribe, and that'll help us out a lot. So with that, make it a great week, be safe, and hope to see you in the Discord. Thanks, everyone.